Good morning, traders. This is Kosnatiko, the founder and a senior trader of Ford Revolutionary Forex Institute. So, traders, before we continue with our presentation, let's read the risk disclaimer for Forex trading. Trading foreign exchange or margin carries a high level of risk and may not be suitable for all investors. Past performance is not indicative of future results. The high level of leverage can work against you as well as for you. And then lastly, any information or advice contained within this platform is shared for educational purpose only and it should not be considered as financial or investment advice. So traders, let's go through our presentation for today. So in our presentation for today, traders will teach you how to draw a valid trend line. So before we go through our lesson for today, let's recap on our previous lesson. So on our previous lesson, we discussed the basic guidelines to trade a trend line trading strategy. So we said that we start to sell as from the second lower high, and then we must also look for any bearish reversal candlestick pattern, and then we usually look for a resistance level. Then moving to a bullish positions, we said that you start to buy as from the second high low, and then you also look for any bullish reversal candlestick pattern, and then we usually buy at the support level or at the support level, or we also look for demand zones. So those are the main basic guidelines that we discussed on our previous lesson. So on today's lesson, we will demonstrate to you how to draw a valid trend line. So the first step that you do when you want to draw a valid trend line, firstly you need to identify the highs and lows in your charts. Basically, in a bullish trend, basically you need to identify higher highs and then higher lows, and then after that to connect the higher low, and then after that to connect the higher lows. But we will show you on our upcoming slides how to go through that process to draw a bullish trend line. Then in terms of the bearish trend line, the first step that you do, you identify the lower lows and then the lower highs, and then after that you connect the lower highs. We will do the same in this type of trend. Then now let's move forward. So in this slide, traders will teach you how to draw. This is the first step to draw a bullish trend line. So the first step that you need to take when you draw a bullish trend line, you need to identify the higher highs and then the higher lows. So in this chart, traders, we are only talking about this uptrend. We have this higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then after that, what we do, we said we need to connect the higher lows, and then we connected these higher lows. So that is how traders we're supposed to draw a bullish, basically a valid bullish trend line. Firstly, we need to identify the higher highs and then the higher lows. Higher high, higher lows, higher high, higher lows, higher high, higher lows. When we want to draw a bullish trend line, the first step is to identify the highs and lows. Sorry, the higher highs and then the higher lows. Secondly, you have to connect. We have to connect the higher lows. Yeah, you may connect the higher highs, but it's very important. Basically, a bullish trend line is mainly being identified by the connection of the higher lows. Then, when we move to a bearish trend line, the first thing that you need to do is to identify in your charts. You need to identify the lower lows and then the lower highs. Let's look at our charts. We have this lower high, lower low, lower low, lower high, lower low, lower high, lower low, lower high. So basically in this chart we are talking about the major lower lows and then lower highs. So the second step that you need to take when you draw a bearish trend line is to connect the lower highs. That is what we said in the introduction of this lesson. So now this is the connection of the lower highs. As you can see, we have 1, 2, 3, 4 lower highs being connected. They are smoothly connected. So let's recap again. So the first step, when you open the charts, you look for highs and lows, and then when you see that the price is moving to the uptrend, the first step you need to take is to identify the higher highs and then the higher lows. Higher highs, higher lows. And then after that, you make sure that you connect the higher lows, because a bullish trend line is being identified by the connection of higher lows. And then when we move to a bearish trend line, the first step is to identify the lower lows and then the lower highs. Then you will see that no, this chart is moving to the downward because you were able to identify the lower lows and then the lower highs. And then secondly, you need to connect the lower highs. Okay, so those are the steps that you need to follow. So before we close this lesson, we need to compare this. We need to compare our examples with the basic guidelines to trade the trendline trading strategy. So let's compare this uptrend with our basic guidelines that we discussed on our previous lesson. So we said on our previous lesson, we look for buys at the second lower high. So we have this starting point, yeah, this is our starting point, and then we have this higher high, higher low, first higher low, second higher high, and then on this second higher low, we have, so firstly, we said that we look for bullish positions as from the second high low. Then this is our second high low. Then now we are coming to look, then now we have to look for bullish positions. So we said that we must look for any bullish reversal candlestick pattern. And then in this case we have this shooting star. Okay, after that we have this support level was tested, yes, and then after that, so those are the steps. For firstly, second high low, secondly we have a bullish reversal candlestick pattern, which is a shooting star, and then after that we also have a support level tested again. Then the price went up, then the price make another higher high, then the price came back again, then make the dead high low, and then in this dead high low, what we are looking for bullish reversal candlestick pattern. Yes, we have a morning star. This candlestick is called a morning star. And then after a morning star, in terms of the support level, in terms of the zones or the levels, we have the resistance level. We have this resistance level 1, 2, and this resistance level was broken, and then the price came back again, then turned this resistance level to a support level, then the price went up again, executed another trade, then we put it on profit. So that is how we could have executed the bullish trades within this uptrend. Now let's compare the basic guidelines with this bearish trend. So we have this starting point, this is our starting point, and then we have this first lower low, then we have this second lower high. Okay, let's say first lower high, then first starting point, first lower high, first lower low, first lower high, second lower low, second lower high. Then on this second lower high, thereafter we have this evening star, because we have this bullish candlestick pattern, we have this continuation, and then after this we have this bearish candlestick pattern, which was completed plus minus, let's say plus 50% of the distance of this bullish candlestick pattern. So we call this a evening star reversal candlestick pattern. And then in terms of the support level, yes, we do have the support level 1, 2, 3. Then after that we executed a bearish trade, then the price went down again, then the price came back again, tested this bearish trend line. Then after that, looking for bearish reversal candlestick pattern. Yes, we have this pin. We also have this dark cloud cover. Then after this dark cloud cover, let's look for support level or resistance level. Yes, we do have a support level 1, 2, 3. Then this support level was broken down. Then the price went down again. Then went down, broke this support level, then turned back again, then turned this support level to a resistance level, then executed a trade. Then the price went down again, then the price came back again, tested this resistance, this resistance level, which is a trend line resistance level or a bearish trend line. Then after that, the price formed this bearish engulfing reversal candlestick pattern. Then after that, in terms of the support level or resistance level of demand and supply, yes, we do have the support level 1, 2, 3. Then the price went down again, so you could have still on profit in this trade. So that is how we could have executed the trade within our example. So traders, that is how we're supposed to draw a bullish trend line. So let's recap. So firstly, in a bullish trend line, you look for higher highs and then higher lows. So you identify higher highs and then higher lows. Secondly, you connect your higher lows to draw a mini trend line. Then, in terms of the bearish trend line, you look for lower lows and then lower highs, and then after that you connect the lower highs, and then you start to look for bullish positions as from the second lower high. You start to look for bearish positions as from the second lower highs. So traders, that is all we have for this lesson. So we will catch you on our second lesson. On our next lesson. So traders, thank you for watching. Goodbye.